It works. Turn it down. Yo, everyone is eager again. I like it. 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 What up, gang? What up, gang? What up, gang?
Yes, Michael.
What's good? What's good? What's good? What's good? Are we ready for the game? Are we ready for the game?
Yes, yes.
Good, good, good. Okay, bear with me a sec. I'm just gonna let everyone come in. Gonna give it like 2 or 3 minutes. Hope everyone is good. Hope everyone is blessed. I highly, highly, highly recommend a pen and paper because they're always good. If you're gonna get some game to remember, then we want a pen and paper. Although you may think you can remember, if you want to hand down this game to the next generation, they can't remember what's in your head. What about pen and paper? I'm gonna start at exactly 5 minutes past. So I'm gonna give everybody a bit of time.
Hi, can I say something?
Oh, of course you can, bro.
All right, say no more. So, welcoming my homie El Mono. This is like one of my G's, and today is the day that he finally stepped in the markets.
Oh,
Crypto.
yes.
He just bought his first Bitcoin and Ethereum and stocks today.
Yes.
Yes.
Yeah.
That's one of them, bro. That's gotta be recognized because that's
Has to be
that's the step.
recognized. The
Has
day
to.
one has to
Has
be. And you know what, El Mono, let me tell you about my boy Mr. Harding. This guy is now how would you say? I don't want to introduce you, but he teaches me. He teaches me as well.
Oh, there we go. I can hear now.
What up? What up? What up? I'm just literally sending the code out. Got a couple of late stragglers just asking for the code.
I don't know more. Basically, when it comes to stocks, this the guy. This the guy.
Hopefully we don't get hacked this week. last week was a bit mad. We got hacked at the start.
How did we get hacked?
You got hacked.
I have no idea how we got hacked at the start, but all I know is the start of last week's call got hacked by I think it was about 3 kids. Just came on, started mooning, started being racist, swearing, doing your mom jokes and everything. It was like, raw. Like, how did this happen?
How did they get in the place?
Bro, they got in, bro. They got in. So it's what it is. What up, Josh? My cousin Josh is in the building.
All right, man.
What up? Okay, we're
How's
gonna
it
get
going,
started.
guys?
Hey.
Good to meet the team.
Yeah, man.
How you doing, Mike? Are you well?
Yeah, man. All good. Just ready to dive in and show some people what's happening, especially with the news, because at this moment in time, everyone wants to be investing because it's looking hella lucrative. And as I showed in one of my previous calls about how the GameStop situation was a complete play by the hedge funds and people have no idea how deep it actually goes. In one of my previous episodes, which is available on YouTube if you want to watch it back, I show how completely in bed the exact hedge funds that people were trying to take down are basically sleeping and creating babies with Robinhood, the main platform that was used to try and take down these same hedge funds, and how they get paid on every transaction that goes through Robinhood. So it was just like it's just a fat meme. Like the whole situation was a fat meme and just complete misguiding and complete hyping in the news and the media to just get people to be part of one of the biggest pump and dumps so far. And but I think it's a good thing because it brought more attention than ever to the investing and financial literacy space than ever. There is more people now than ever that are interested in investing, more people than ever that are interested in getting involved in the stock market, in the crypto market, because they've seen, hang on a minute, you can make that kind of money. Hang on a minute, my money can work for me. Like, whereas unfortunately, a lot of us, our parents, our grandparents, didn't even know that this was possible. They didn't know. In fact, I'm curious. Pop, you know how on Zoom you can do the hand thing? Can you do the hand thing on this? I don't know if you can.
Yeah, you can raise your
raising hand thing. Raise your hand if your parents or grandparents have invested on the stock market and are quite knowledgeable about investing on the stock market. I just want to see out of 20 people, how many people that actually applies to. so far there's no hands. There's no hands. Okay.
Yo. Can I just say something? Yeah, shamelessly plugging you in. We got 20 people in here, and Michael's YouTube is highly undersubscribed. So you all got to click on that link in the chat and subscribe to him. Michael, guys, do you guys know why it's important to have 100 YouTube subscribers minimum?
I don't,
Custom URL. So let's all help Michael get 100 subs on YouTube because he goddamn deserves it. So we can have youtube.com/whatever he wants. Let's get it.
Oh, snap. I didn't even know it worked like that. Okay, cool. Right, while you guys do that, I'm going to load up the slides and we are going to get busy. Okay. So, first of all, we're going to start off with this week's earnings because this week we have got some bangers dropping earnings. When I mean bangers, like bangers. Okay, cool. So I'm just going to share my screen now. Let me know when you can see my screen. Oh, Paul's just trying to get in. Let me let him in. Okay. And we are sharing the screen now. Can we see? Can we see? Okay, all good. Okay, cool. So the whole theme direction for today's show is why you can't always trust the news, especially when it comes to being an investor. We're going to cover, are we in an actual financial bubble or are we not? We're going to cover all the signs that you should be looking for a financial bubble. We're going to be covering the Apple versus the Treasury note. We're going to be covering where and how to calculate your take profit, both using technical analysis and fundamental analysis. We might squeeze in a in-depth analysis of a company if my boy Moggs is available. And then we're going to hand over to Ninja at the end to just spit some game on crypto. I've got a few cryptos that I'm going to talk about as well in the altcoin space. So first of all, what we're going to do and what we're going to look at is, obviously, I've got to do my little disclaimer. So I am not a financial advisor. I do not intend to be perceived as a financial advisor. Anything you may see or hear on my show is for entertainment and educational purposes only. All investment comes with risk. Please seek financial advice or learn how to mitigate the risks before making any investment decisions. If you're after a financial advisor, please contact me and I can point you in the direction of several that I'm working with. So let's get into this. Okay, so straight away off the bat, this week, you can already see some companies here that you know they've had a good earnings. You know they've had a good Christmas. So all these earnings here are companies that we're looking at. Do we think that they've done well over Christmas? These companies, we're thinking to ourselves, do the hedge funds think that these companies have done well over Christmas and over the pandemic period? Now, right here is a cheeky little one. Realty Income. If you don't know, get to know. It's a REIT. What is a REIT? It's a retail residential and property investment trust. So it's basically a way of getting into property through the stock market. Now, we always hear that people are getting into property and this is where wealth is. It is, but it's actually much more accessible, and the way that big money does it is through REITs, and they pay out, some of them pay out monthly dividends, some of them pay out quarterly dividends. So definitely check out REITs. Just literally go on Google or YouTube and type in REITs game. Okay, so the next ones. One of the ones that's actually on my watch list at the moment is Crocs. Believe it or not. Why? Just because the revenues for Crocs has been going through the roof. People have been buying more Crocs because they're working from home. definitely one to watch out for there is Crocs. Without a shadow of a doubt, one of my personal investments that I'm mad bullish on is Square because of PayPal. Obviously, not PayPal, because of Cash App. They're doing absolute bits. So watch out for that. Upwork, do we think Upwork's had a massive increase of people during the whole COVID pandemic? People working from home and looking for freelancing jobs? I think so. Then we've got on Wednesday, NVIDIA. We just got to take a pause for that one because that's a no-brainer. If people been building custom PCs, yes. If people, has the crypto space gone crazy because people are trying to buy bloody graphics cards? Yes. Next one you want to look at, Jumia, the African Amazon. I beg you, go and look at the chart for Jumia. We might look at that a little bit later because they are doing bits. Next one, Teladoc. Now, this is the funny one, right? Teladoc is literally what it says on the tin. It's being able to see a doctor over a video conference. People are trying to say that people aren't going to carry on using Teladoc after the pandemic. Now, I don't know about you, but everyone I know, especially elderly people, they ain't really trying to go to the doctors, especially after the pandemic. So, you know, that's my opinion on that one. We've also got Booking Holdings, very interesting one there. Then pre-market on Thursday, what we got? Moderna. Oh geez. One of the vaccine suppliers. Did they have a massive increase in their revenue and in their assets, being as they got government funding for a vaccine? I wonder if they've done well. NetEase, say no more. Just look at their chart. Domino's, one of the biggest hidden asset plays on the planet. Domino's is. People think it's a pizza company. It is not a pizza company. It's a tech company in disguise. Have a look at that one. Carvana, we've been doing bits. Again, look at their chart. DoorDash, say no more. Airbnb, Salesforce, Etsy, come on. Yo, DraftKings, this week in earnings is going to be a mad thing. Absolute mad thing. I highly recommend some of the companies that I've just mentioned, go and do your research on, go and have a look at them. Okay, cool. So moving on to the next thing. So the next thing that I just wanted to really touch on is diversification. So what we're touching on here is emerging markets. Now, why am I talking about emerging markets? Because if you've got a diversified portfolio, and if we are in a bubble, then you probably want to have some investments outside of the UK. Ooh, just skipped ahead and gave you the game away already. Ooh, cheeky little demonstration. Okay, cool. So digitalization in Southeast Asia. So today's low interest rate environment has left investors searching for higher returns. But in a fast changing world, where should they begin to look? The answer could be emerging markets. Capital at risk. The value of investments and the income from them can fall as well as rise and is not guaranteed. Investors may not get back the amount originally invested. Risk. Emerging market investments are usually associated with higher investment risk than developed market investments. Therefore, the value of these investments may be unpredictable and subject to greater variation. Now, the increasingly vital role of China in portfolios may lead investors to overlook the broader opportunity set within emerging markets. Risk. Investments in China are subject to certain additional risks, one of those being that they sometimes lie on their earnings reports. So that's a bit of a problem, particularly regarding the ability to deal with equity securities in China due to issues relating to liquidity and reparation of capital. The fact that it's a communist country and the government can just go, no, we want a slice of this business. Pretty tricky. So comparing market capitalizations, many emerging market countries are on equal footing with the tech's biggest names. So Facebook, which is worth 746 billion, is got the same market cap as Brazil, which is 711 billion. Apple, which is 1,980, well, basically 1.9 trillion, almost 2 trillion, has got just under the market cap of the whole of India. NVIDIA, 334 billion, is got the equivalent market cap of Indonesia. Shout out man like Ninja. Netflix, it's got 221 market cap, and Philippines is 270. Tesla, 401, and Thailand's entire market cap is 428 billion. Now, one of the companies that I've personally been looking at is a company called Sea Limited. Why? Because they've pretty much got a monopoly
on the whole of the internet in Southeast Asia. And their user base is growing because the usage of the internet in Asia seems to be substantially higher than anywhere else in the world for no apparent reason. So in the Philippines, the average daily time using the internet is 10 hours in comparison to the UK of 5. Thailand, 9 hours. Indonesia, 8.3 hours. Malaysia, 8 hours. Vietnam, 6 hours. Now, I'm not too sure if it works the same way in Asia as it does in some African countries, but sometimes what happens is your phone gets inbuilt with Facebook. So you automatically have Facebook or YouTube inbuilt on the phone with unlimited usage, which would explain those numbers. Now, 70% of the region's 583 million citizens are now online. And again, where do I get this information from? None other than your boys BlackRock. So we know that this is good information. The average internet user in the Philippines, like we said, it spends 10 hours a day. That's 56% longer than the global average of 6 hours and 42 minutes. So why should investors care about these developments? According to the latest projections, it could create an internet economy worth 300 billion by 2025. So what's happened? What's the growth that it's had? Now, in 2015, the whole of the Southeast Asia internet market was worth 32 billion. By 2019, that had reached 100 billion. By 2020, that had reached 105 billion. And it's projected over the next 3 years, by 2025, that's going to reach 309 billion. So we got a little bit more in-depth information on that in this next slide. If it loads. Yep, there we go. So we can see, ooh, this keeps skipping ahead there, trying to give you the game ahead. Okay, cool. So Southeast Asia, which includes Indonesia, Malaysia, Philippines, Singapore, Thailand, Vietnam, which are incredible places. Highly recommend going out there if you've never been. Quickly emerging as the next digital giant. The region is currently home to an online population of 400 million people, at 53% increase from 2015. That's a mad increase in population. Just really deep what that is. Like, that's crazy. So 400 million people increase, 53% increase since 2015. Okay, with so many people going online, companies such as Grab, a local rideshare, which allows you to get your taxis, allows you to get your food, absolutely everything online. Again, when I was in Asia, the only thing I was using was Grab. Incredible resource out there. So we can see, again, it's just touching on the growth. Now, favorable demographics are also contributing to its growth. The region is expected 50 million entrants to its middle class by 2022 and has an average age of just 30.2 years old. That's roughly 10 years younger than the UK and 18 years younger than Japan. Now, what does the average 30-year-old do online? Play games, social media, your whole life is online. So this is why it's a unique opportunity investing in Asia, especially in the tech market. Now, where can you do that? You can do that through some ETFs. Now, one of the ETFs that I know Ray Dalio, which we're going to talk about Ray Dalio in a sec, he's currently invested in, he's a big fan of MSI Emerging. Now, depending on which investing platform you're using, you should be able to get that. I'm just going to bring it up for you now so you can have a look. And we're going to also compare the different indexes, because it's one of my favorite things to do, is to just really understand what's happening with the different indexes. So let's just go markets. Okay, cool. So, and we're going to look at it from COVID and just look at the recovery rates of them since COVID. Sorry, that's my gold trade. So let's go. And what we'll do is we'll compare the UK market in comparison to the Chinese market, the MSI emerging markets, the Chinese market, and the Japanese market. So this is on the daily. What we'll do is we'll bring it out to the monthly, so we can get it really, really clear, a clear understanding. Okay, actually no, we won't do monthly because that's too far out. Okay, so we'll go weekly. Okay, you can guess what this big drop is here, right? This was Coinky Dinky. What month? March. What month are we in now? March. What also happened in this March? This was the COVID drop. January, February, March, boom, fell off the cliff, right? But let's just really notice what's happened here with the FTSE. It hasn't got back up to this price where it was before. We're almost a year into it and the FTSE hasn't recovered. Now when we compare this to the American markets, the S&P, and we look at the same time period, do you see what I see? So January, February, March, the dip off, the recovery, it got back to the highest highs that it was at in July 2020. And the UK still isn't anywhere to be seen. So make your investment decisions about investing in the UK very wisely. Now, then let's look at the Japanese market. Do we think they've recovered? Take a guess. Looks like they have. And look at their drop-off in comparison to the UK drop-off. Look at their recovery time. Now let's have a look at the Chinese market. Look at the size of their drop-off compared to everyone else's drop-off. I want you to really look at their gains in comparison to everyone else's gains. Let's just really drum this home. China, the UK. Even if you can't understand charts that well, I'm I hope that you can see what I'm showing you there. So now we're going to just quickly look at some of those ETFs in the emerging markets that we mentioned. Now, what's an ETF? It's like the ability to get an index like the FTSE, like the S&P, but it allows you to invest in more specific things. So we'll go to my little list. This here, right here, what I'm giving you is absolute game. Ain't nobody giving you this. Look at this. I'm just giving you my list of ETFs that I'm watching. So we've got VanEck, we've got Hero, we've got SMH. Again, you want to probably write some of these down. Hero, SMH, QQQ, Global X Cloud Computing, Amplify Online Retail, otherwise known as iBuy, Global X Robotics and Artificial Intelligence, iShares Nasdaq Biotechnology, Pure Funds Drone Economy Strategy ETF. We've got ARK, which we know I'm mad bullish on and I love madly. ARK Web, ARK Innovation, ARK Genomics, ARK Industrial, ARK FinTech. We've got iShares US Medical Devices. We've got Global X Lithium, Global X Internet of Things. And now we're going to add the MSCIs because they've got loads of emerging market ones. So MSCI, they've got Emerging Markets Index, South Korea markets, the Brazil Capped ETF, Chinese Information Technology, iShares Germany if you wanted, iShares MSCI Japan ETF, iShares MSCI Latin America. So again, just go on YouTube, go on Google and check out iShares or MSCI Emerging Markets game. Okay, so let's get back to the slides. But before I do that, I'm just going to take any quick questions on that because that was a lot of game there. Anyone got any questions on any of that?
Yeah, I got a question. What platform are you using to invest in these ETFs?
I use IG. Now, I've got a referral code for IG. However, with IG, it's a bit tricky now after this whole GameStop thing to actually be able to get in. Now, the reason that it's a bit tricky is because you've got to answer a set of questions when you're logging in. If you want me to, I can help you. Just drop me a message. I'm going to put my Ninja. Can you put my Instagram in the chat?
Got you, homie.
It's at I am Mr. Hardin. If you want to get onto IG, so you want help with the questions, the little exam that you've got to do to pass to be able to actually invest in ETFs, let me know. I'll help you go through the questions, and I'll send you my referral code, and then we can get you investing in some ETFs. Coolios. Any other questions?
Yeah. How do you size up a trade?
How do I size up a trade? In what respect? There's lots of ways that I size up a trade.
Well, say you got a certain amount of money, let's say 10 grand.
Mm-hmm.
How do you decide how much of that to allocate between the different ETFs?
So that is completely exactly where you would speak to a financial advisor. Now, my personal way is it's about mitigating your risk. So it's about understanding, okay, cool. In terms of my risk allocation is how risk averse am I? How much risk do I want to take based on the growth that company's been doing, based on the risk factors that company may be facing in terms of the ETF? So let's say, for example, I would say the traditional safe hedges that most hedge funds go for, most people go for, is something like a treasury bond, which we're going to come to later, which is the T-note. Then something a little bit more risky would be an individual stock. Then some people would say that an ETF would be a risky strategy just because of the drawdowns on it. So that's what you'd want to look at. You'd want to look at what are the traditional drawdowns of that thing that I'm about to get into, which I'm going to show you before the end of this call, how you can look at the drawdowns that a company normally has, and how you can look at the gains that a company has on a 6-month, 1 year, 5-year basis to help you to figure out how much you want to allocate to each investment.
Cool. For real, I get it. And so if you wanted to invest, so like how, in terms of time, how long do you look? Like, do you look for days, weeks, or months in terms of your trade?
Oh, so for me as an individual, before I invest into anything, I allow at least 2 quarters to pass. Now, the reason that I do that is because I want to check the investors' reports. I want to monitor the movements of the stock to make sure that when I'm in it, I know the movements, I know the patterns that it goes through. I want to see, is the CEO and is the company capable of delivering on what they say in the earnings reports, in the guidance that they're saying is going to happen with the company? Is the company capable for 2 quarters in a row of beating their earnings and meeting their projected targets? So that's how I do it. Two quarters minimum. So I spend about 6 months researching something.
For real.
Then I get into something.
6 months, right?
Yeah, that's for me personally anyway. Some people want to get into things real quick. For me, I'm doing 6 months of research before I get into something, because I'm not here to lose. I'm here to win, and I'm here to do my research and to make sure what I'm doing and whatever I'm getting in, I'm in it for the long run, for the next 3 years, 5 years. Cool. So we'll jump in.
So you have like a watch list and you watch it for 2 quarters. Okay, I get you. Yep. Thanks.
No worries. Hope that helps. Okay, so let's go on to the next part of the call, which was the news versus facts. So this is one of the things that we all need to be very, very, very aware of, especially as people that are new to the markets. We have to be aware that right now we live in a world full of absolute clickbait. We have to be aware that right now, a lot of the traditional media outlets and some of the side media outlets and mainstream outlets, they're in a position whereby they're losing traffic dramatically in comparison to social media platforms like Instagram, like Facebook, so on and so forth. So what they're having to do is do whatever they can to get people onto their platforms. What's the best way of doing that? Absolute clickbait. So this is what's happening to news in general. And again, what's also happening is people aren't checking the sources of the news that they're reading. They're just seeing a title and then they're not actually checking, okay, is this news that I'm reading coming from a valid, reputable source that is known for giving out valid, reputable information? We're very prone, especially as people that are new to investing, to just getting into.
I'm sorry, I was watching trading with this guy here that's teaching us some stuff here. So
mute that mic. No. Hey there, guys. If you can just mute your mic first.
Starting, you know, the guy that always do the Zoom thing. He knows a lot of stuff.
There we go. I've just muted everybody. Okay, cool. So let's just go back into where we was. Hang on a sec. Okay, cool. So I'm going to use 2 prime examples. So the example that we've already got of the news versus the facts is the whole GameStop situation, where everybody was fed a complete load of BS about it was a whole play to take down the hedge funds and whatever. And there was loads of insiders inside Wall Street Bets going with this story to hype it up, and it was just everywhere. And then we was also fed this BS that like the reason that all the platforms had to stop allowing people to trade was because of liquidity problems, when they lost way more, as I've shown you on the charts, from the COVID drop in March. So where was the liquidity problems then? But, you know, that's my personal opinion, but you can do the research and check out the facts on those yourselves. So the news versus facts, we're going to look at a company called Quantum-Si that's been getting a lot of hype because it's in a SPAC. Now, one of the things that's happening at the moment is we have these SPACs. So a SPAC is called a special purpose acquisition company. Now, what they are is they are basically big hedge funds or big famous investors like Bill Ackman, like who else is doing one? I've got a list of a couple of them that are doing them. We'll come to the list of the SPACs later, but basically it's big investors and big hedge funds getting private companies onto the market quicker instead of having to go through the traditional IPO route. Now, it's important for companies to go through the traditional IPO route because then they're vetted, they're checked. Well, you'd think they are, but then still companies like Nikola and whatever get through. But SPACs are just basically getting companies onto the market quicker. And this is what happened with Airbnb. Airbnb was a SPAC. It wasn't a traditional IPO. So this is what's happening. And because of these SPACs, the hedge funds and these big players, they want their investment to go up. So they're going to not really play by the traditional rules that would happen with an IPO. They're going to do what they can in the news to get some money behind their investment. Like their SPAC launch is way more financially lucrative than a traditional IPO launch. So this is why we're very likely to see a lot of dodgy news. So I've highlighted Quantum-Si because we're just going to go on Google and I'm going to show you what happens if you just literally type in Quantum-Si. And I've got 2 articles here that I'm going to show you the links to them, and I'm going to show you what they're saying. And we're going to then go and do the facts and look at that in comparison. So literally, if you type in Quantum-Si on Google, this is what will come up. Their website, then some videos from YouTube, then globalnewswire.com. Me personally, I don't think globalnewswire.com is a very reputable site, but hey, nonetheless. So we can see here some stuff here. Does it say the source? Does it say who's written this article? Does it give us the facts? We can contact media relations, but again, nothing too much about where it's come from. Then there's another one from Market Realist, and these guys are saying that ARK Invest has bought some of this stock. So keep that in mind. Look at this title: ARK Invest buys Kappa SPAC stock before merger. So they're directly saying that they've bought it. Now, then also, if we go on Google again and we're like, oh, ARK Invest are involved. Okay, let me go on Google and type that in. Type in Quantum-Si, ARK Invest. Look what comes up. First thing, Yahoo Finance, then the Quantum-Si article. So go on Yahoo Finance. What are they saying? ARK Invest backs SPAC merger for Quantum-Si. And we've got a whole article about it here. Now, this is where it gets very interesting when we start reading into what's actually being said in these articles. So I've already highlighted a little bit from these articles. Okay, so one of the first things that I noticed in one of these articles was the fact that this one article was saying that ARK Invest had actually bought some shares in this company. So I wanted to do my research and do my due diligence and find out, have they actually bought shares in this company? And then I did a bit more reading in another article, and one article was saying that ARK Invest had bought shares. And then a different article, oh, sorry, let's just go back. Come on. Sorry about this, guys. Okay, cool. So we've got this headline here, and we can see this article. Who's it from? It's from the people that have actually that have got the SPAC, which is High Cape Capital Acquisition Corporation.